Today we're going to discuss the economics of Japan's potential fire sale of U.S. debt. Picture a quiet room with one loud clock. That clock is U.S. debt ticking with every refinancing. For decades, treasuries were the world's safe room, deep market, instant liquidity, a promise wrapped in the dollar, not perfect but dependable. Then the rules start to bend. Interest rates rise, the cost to roll old debt into new debt climbs, people borrow less, that means there's less money to spend, incomes decline and the economy slows. And when the economy slows, the pressure builds on the Federal Reserve. Then the next policy move is to cut interest rates. Markets hear that and they don't just think stimulus, they think easier money, heavy deficits, and a government that still needs constant funding. That's when the fear changes shape. Not will the US pay, but what will those dollars be worth when it does? If investors start pricing higher inflation risk, the 10-year yield can rise to compensate. And when long-term yields rise, the bonds already out there lose value, quietly at first, then all at once. Now the safe room gets crowded. Everyone's holding the same asset, watching the same screens, hearing the same rumor. Long-term risk is back, bond prices fall, portfolios bleed, and the pressure spreads to the holders. Enter Japan, the biggest foreign owner of U.S. treasuries. They've held them for stability, reserves, and liquidity, like a fire extinguisher you hope you never use. But when the fire is bond volatility, the extinguisher starts to look heavy. Japan doesn't have to sell because it can't pay its own debt. This is different. This is about risk, about incentives, about stepping away from an asset that suddenly moves like a trade, not a reserve. And when treasuries are sold, the proceeds are dollars. To bring capital home, those dollars often get turned into yen. That flow matters. Dollar selling, yen buying, these aren't the only factors, but they could become a catalyst. So the real question isn't whether treasuries can be paid, it's when the world decides the price of safety has changed.